In this video, I will be doing a complete breakdown of how I made $20,000. Yes, $20,000 from day trading options in less than 1 hour. If you guys saw my previous video, you guys know that I lost $6,000 a couple of days ago from day trading. The next day, the following day, I made $4,200 from day trading by lowering my position sizing. I posted about that on my Instagram. So if you guys don't follow me on Instagram, make sure that you follow me there because those are the people to know about my green and red days first. Now coming to today, 24th of January 2022, I made $20,000 in 45 minutes from day trading options. That's why if you're a day trader, your only job is to let your winners run and cut your losers short. In this video, I will be first breaking down the overall market because that is very important because we have been in a massive sell-off recently for the past 2 weeks. Then we will jump on to the technicals of the stocks I was watching, then my entries and exits. So make sure that you guys watch this video till the end because this video is definitely going to help you with your day trading journey. Let's take a look at my game plan, and my very first trade right off the market open on this day was on Tesla because Tesla was gapping down a lot on Monday. On Friday, the previous day close was around $943. On Monday, Tesla was gapping down around $40 to $50 for the day. My plan on Tesla is that if we get a pullback to maybe 900 or maybe 910 or maybe even 920, I would like to enter my puts position for a trade towards the downside because when the market is gapping down a lot, usually at the open, there's a tendency to push towards the upside, shake out the buyers and then continue towards the downside. And that is the reason I was watching Tesla towards the downside if I can get a really good pullback entry around 900 or 920 region. Now, if we jump back to the daily chart and look at the technicals, you guys can see in the pre-market, Tesla was holding right around the previous support. This is a very strong support because earlier in 2021, Tesla made an all-time high of around 880 to 900 region. That level held previously earlier in December last year. And then now in the pre-market on Monday, this level was holding. So that's why I was like, if this level breaks towards the downside, we might see a lot of stop losses getting triggered and a clean flush towards the downside, especially if the market sells off. This is the 1 minute chart of Tesla from 24th of January 2022. You guys can see in the pre-market, we saw a crazy sell-off towards the downside. We held this 920 region. We saw another sell-off and Tesla made a pre-market low of around 885 region. And we just discussed that 880 to 890 region is a very strong support on the daily chart. And Tesla held that level in the pre-market as well, verifying the level. So now my job as a day trader is to look for my entries and exits, my levels in the pre-market because Tesla is gapping down a lot. I don't want to chase the break or pre-market low. My job as a trader is to enter on the pullback because the market is very extended. So if I can get a good pullback entry around a critical level, that can be a really good trade in my favor. Now, after the market opened around 4 a.m., that is the pre-market hours, Tesla found resistance around 920 region right here. So if I draw a line, you guys will see a couple of rejections around 920 region. Tesla failed to hold above 920 right here. It flushed towards the downside and then this 910 level started acting as support. And then finally, after a while, it broke down under the $900 level. 910 region had a nice sell-off and made a pre-market low of around $885. So I will be looking for a pullback entry around 910 or 920 to catch a move towards the downside. Now I'm talking about downside, but if you're a day trader, it's very important to not to be biased and be open-minded and think on your feet because now, on the other hand, if the market pushes towards the upside, if we make a clean move towards the upside, I'll be looking at the same levels, 910 and 920 levels for a break towards the upside. That's why your job as a day trader is to mark your levels, have a trade idea, but also be open-minded because if you're biased on a stock or maybe the market going down, it might go the other way and you might bag hold your loser and blow up your account. We will take a look at my entries and exits on TradingView. I have a recording from this day, but to be honest, there's no point playing that recording because I record Dash Trader Pro. That is the platform I use for charting and level 2. And if you guys don't know, Dash Trader Pro had a delay of 1 to 2 minutes on this day. So even if we take a look at my entries and exits on Dash Trader Pro, it won't make any sense because the quotes were delayed by 1 or 2 minutes. I was completely trading based on TradingView chart. That is this application in front of you. And I was also looking at the Bookmap, which is another application I use for level 2. And this is another lesson that you can take from this video, that you should always have a backup option. position. If your career is day trading, if you earn a living from day trading, it's very important to have a backup option, because platforms sometimes they have issues. Sometimes your Thinkorswim will have an issue, or maybe the Interactive Brokers platform will have an issue. But if you guys don't have a backup option, you can easily mess up your account on that day. I will post a screenshot of my entries and exits right at the top, and I will be discussing why I entered right here. As you guys know, I was watching this 910 level, which is a very important level that was holding in the pre-market. My entry was right here. I entered my puts position. I entered 880 puts, same week expiry contracts, and my entry was right around the top of this candle. And I entered here because 910 was holding very strongly on the level 2, and it was failing to hold above $910 level. When I saw weakness around 910, I got filled 5 contracts, 880 puts, and my fill price was 34.57. After taking my initial entry right here, my first exit, 2 of my contracts was at 938, around the bottom of this candle, the low of this candle, at a fill price of 42.01, just to lock in some profits. Then we pulled back to $900 level, 903. We failed to hold above 901, 902, and then we saw a clean flush towards the downside. Ideally, if my platform was working perfectly, Dash Trader Pro, if I was able to look at level 2, I would have most likely added onto my position right here, but because the platform was not working properly, I just decided to hold on to my initial position that I got in right here. After taking my first partial, I was very patient with this trade, because as I discussed, 885 is a very strong support on the daily chart. If we see the break of 885, we might see a lot of stop losses get triggered and a clean flush towards the downside. That's why I told you guys it's all about holding your winners. I took my next contract out at a fill price of around 49.45 at 945, when Tesla made a new low of the day and broke the pre-market low. Then my next 2 contracts, I took exit around 9:48 and 9:49 AM at a fill price of 53.65 and 56.25, overall making $7,000 on this trade, which was return of 40% of my investment. Insane. Even if you look at the risk to reward perspective, my risk was basically $500 or $700 on this trade, because I entered right here around $910 level. My risk was 911 and 912. If Tesla would have made a new high of the day, or maybe a new 1-minute high, I would have exited my position. So I was risking maybe $700, and I caught a move that was worth $7,000. So the risk to reward was 1 to 10, which is amazing. Let's now jump on to my next trade of the day, but before we do that, please make sure that you smash that like button, subscribe to the channel, and hit the bell notification, because I'm releasing 2 to 3 new videos on day trading, my journey as a day trader, every single week. My second trade of the day, I only took 2 trades on this day, was on SPX. That was a winner of around 80 or 90% of my investment. Again, an insane move. SPX, as I told you guys that the overall market was gapping down, SPX was around $4,300 in the pre-market itself. So my plan on SPX was to take a pullback entry and catch the break of 4,300 towards the downside. This is the play I discussed in the pre-market webinar that we have every single market open day for our Discord members. If you guys want to be a part of our Discord group, the link will be in the description box below. Here's a 1-minute chart of SPX. After taking my exit on Tesla, I was watching SPX very closely, because on the 1 minute, we kind of made a flag pattern right here. We broke towards the downside, had another flag, then we broke towards the downside. Around this time, the low of the day was 4299.01. And we bounced off this level, that is around $4,300 level, towards the upside. The previous low of the day right here, if I remove this level, the previous low of the day was around $4,321 level. We found that the $4,321 level was acting as resistance on this candle. So my plan was to look for a pullback entry with a stop loss above 43.21 or maybe 43.25 to catch the break of 4,300 towards the downside. When SPX was at 9:56 AM candle right here, we saw a push above 43.21. It failed to hold above 43.21. If I zoom in a bit further, buyers tried to push it towards the upside. It failed to hold 43.21, and then we saw a rejection towards the downside. When I saw that 43.20, 43.21 is acting as a resistance, I placed my order to get filled. I got filled 20 contracts. I was trading 40 to 50 puts, same day expiry contracts, and my fill price was 7.6. I will post a screenshot of my entries and exits right at the top. Yes, my entry was a bit aggressive at this point, but I was already up $7,000 for the day. So I was willing to risk around $2,000 to $3,000 of my profits on a trade like this. So my stop loss was the break break of 43.21 or 43.22 towards the upside, practically catching the top of the pullback. So my stop loss was really small. I was expecting to lose maybe $100 each contract on this trade. I was trading 20 contracts, so I was willing to risk $2,000 on this trade to catch a really good move towards the downside. Also, I have been studying the price action of SPX recently a lot over the weekend, Saturday and Sunday, because this was a Monday. I went through the historical price action of SPX. I was looking at the levels hold and how SPX trades around critical levels. We also had a webinar that we have every single week on Sunday, that is Sunday night, to discuss the upcoming week, and I mentioned and I discussed the price action of SPX in detail in that webinar for our Discord members. If you take a look at my entry right at the top, you guys will be able to see that I got filled 20 contracts at a price of 7.6. That means I was investing approximately $15,000 on this trade because each contract was worth $760. After entering my position, I just took 5 contracts out at 957 or 958 at a fill price of 9.7. And this is just because to lock in some profits. If the trades goes against me, I can still cover the rest of my 15 contracts at break even, and this trade will still be a green trade. My plan when I entered this position was to take 5 contracts out at the first push down, then I can hold on to my 15 contracts for a bigger move towards the downside. After taking my first position out, we had a quick bear flag right here just before the break of low of the day and the critical level $4,300 level, and as I mentioned, I was just holding on to my 15 contracts. I did not take my partials around the top because I was expecting the break of low of the day. When SPX broke the low of the day, I covered another 5 contracts at a fill price of 12.4 right around the low of this candle. Then I covered the remaining 5 contracts at 10.05 right here when SPX was making a wick at the break of 42.95 towards the downside at a fill price of 14.5. We had a quick bear flag pattern under the low of the day right here. So the previous low of the day around was 4,300. We never broke above 4,300, had a bear flag pattern, pushed towards the downside. I covered 2 of my contracts right here on this candle at a fill price of 19.2. Then I covered the rest of the 3 contracts on this candle at a fill price of 22.9 and 19.4. Overall making $13,000 on this trade by only investing around $15,000. That was a return of more than 80% of my investment in less than 15 or 20 minutes, which is amazing. When everything was said and done, let's now take a look at my PNL. I just took 2 trades for the day, 100% win rate. I made $7,000 on my Tesla trade and I made $13,000 on my SPX trade, overall ending the day with $20,000 in the green. And as you guys just saw, I did not invest more than $20,000 on any of my positions. So in theory, you could have made the same amount of money with even a 25k or 30k account, because on my Tesla trade right at the market open, I invested around $15,000 to $17,000. On my SPX trade, again, I invested around $15,000 to $17,000 on both the trades, making $20,000 for the day, which is amazing. That's it, guys. But before you go, it takes a lot of time to make these kind of videos, so I would really appreciate a thumbs up, subscribe to the channel if you are new, and hit the bell notification because I'm consistently releasing 2 to 3 new videos on day trading every single week. Also, again, as I mentioned, if you guys don't follow me on Instagram, make sure that you follow me there because I post a lot of behind the scenes, my green days, my red days, and those are the people first to know how my day is going overall. So make sure that you give me a follow on Instagram. The link will be in the description box below. Thank you for watching and I will see you guys in the next video.